Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, I want to talk about why I invested $15,000 during the stock market crash and what stocks and ETFs that I bought. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, ask them down in the comments. So now guys, let's roll that intro, come on. So now answering that main question of why I bought $15,000 worth of stock all at once, and the reason why that is because right now we are in what you call a crash or a recession, and this is when the general stock market falls down 20% or more. Now, my mindset was saying, hey, this is an absolute for sale sign to pick up some stock at very, very affordable prices. And not to mention a study came out and said, hey, everybody that invested in all of the previous recessions in 2008, in 2020, they had an average return rate of about 20%. And that's doubling what the S&P 500 on average normally does. It does about 10%. So you're doubling what the S&P 500 normally does. That's pretty much my mindset going into it. So now what stocks did I buy? Let's turn to the computer. Alrighty guys, so looking at stock number one, this isn't actually an ETF. It's actually SPY. So this is just the general S&P 500 ETF. And the reason why I bought it is because this is the staple investment for investing, right? You're getting a massive opportunity. The stock in the ETF has sold off from $476 all the way down to $379. So it sold off about $100. Looking back, it's like buying this stock all the way back, in 2021, which is crazy, right? You're getting a massive opportunity to buy it at a very, very affordable price. Not to mention, when you invest in this, it's like investing in the US, right? Investing in the US economy. And I understand that right now we have high inflation and all of this noise, right? But I definitely think looking back, 5, 10, 15, 20 years, we're going to be regret not buying it at this price, guys. But moving on to stock number two. Stock number two is another ETF. It's ticker symbol QQQ. So this one here is this another staple investment. This one here is more on the tech heavy. So you'll have companies like Google, you'll have companies like Microsoft, and all of those fantastic ones. This has sold off from $406 all the way to $280. So it's sold off over $120 per share. So for me, absolute solid opportunity, like buying this stock all the way back, in April or in 2020, all the way back in August, which is crazy, right? Like buying the stock almost 2 years ago. Massive opportunity, huge upside, right? Investing in technology. And people like to say technology is overvalued. Well, where do you think we are right now with technology? Do you think we're getting more dependent or less dependent on tech? Personally, I think we are getting more and more dependent each and every day. People cannot go anywhere without taking their phones, without taking a camera, without taking a computer, laptop, all of that stuff. So this is like investing in that general sector here. Moving on to another fantastic one. Our first stock here is Apple, right? Why would you not buy Apple? It sold off from $182 all the way down to $138. And the beauty of this, earnings absolutely continuing to kill it. And dividends. So you're going to be getting growth, dividends, and it sold off $50 per share. So this is another no-brainer investment for me, like buying this stock all the way back right in 2020. Huge upside on Apple. People like to say it's overvalued, but they don't realize how much people are dependent on these in laptops and computers, guys. But moving on to the next one here. The next one is TSLA. It goes without saying, Tesla sold off, from their highs all the way here at 1,200 down to 600. Sold off, half of what it was at the highs. So for me, buy it, right? Buying it, huge upside. Investing in the EV sector is very, very strong, especially investing in Tesla. I think we're just getting started to see what Tesla has, guys, right? They're more than just an electric car company. They have gigafactories, they have Tesla Solar, Tesla battery, and a whole bunch of other things for technology, autonomous driving. So given sold off from the highs with their last recent earnings blowing expectations, why would I not pick up a couple of shares of this? Next one here, J&J, Johnson & Johnson, a company that's actually up on the year. So this one here is more of my defensive pick for this kind of crash we're in, where I'm still getting some growth, still getting some dividends and all of that good stuff. The next one here, waste management, another more on the defensive side. You got to play both sides when you invest, right? Have a little bit of some defense, have a little bit of some growth, and then go heavy in the S&P 500. That's what I've done, and that's kind of what we've seen, right? Waste management's up on the year. Their last dividend, 65 cents, last earnings, blowing expectations. Why would I not buy some of this? Absolute no-brainer investment for me. But moving on to the last and final one, KO, Coca-Cola. Very similar, more on the defensive side. But the defensive picks are very, very important because you want stability in your portfolio. So this one here is getting growth, right? Getting dividends, doing decent on their earnings. And I think we understand that Coke is a company you never really have to worry about. Dividend king, been increasing and paying dividends for over 58 years. So guys, this is an absolute fantastic picks, guys. So hope you guys enjoyed it. If you did, hit that like button, subscribe. So guys, that is it. Hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care.